Hi, this is Acme with the US Chartbreakers here at Zacks Traders Cafe for Tuesday, the 17th of October. Starting off with the S&P, which has bounced off the old neckline support, 44.30, and above that, we're looking for this market to hit that resistance line there from back in July around 44.35. Above that, obviously, then we're looking for a retest of the best levels of the year towards 4600, and I suppose that would be for the end of November. On the downside, not expecting much now below the 42.80 area, which was the support on the recent recovery. RSI pushed back above neutral 50. That gives us more confidence, but I suppose we would want to see a break of the near-term resistance through 43.80 to really feel comfortable, or maybe even the 50-day line just shy of 4400. Moving on to the stocks, and the interestingly named stock is the first one to be looked at here. It comes in the form of A.K.A. brands, and you can see that the market has been slightly wobbly in the near term. We have the bear trap below August support there around $4.40, but at the moment it looks as though we're heading within a broadening triangle, or at least a rising trend channel, up towards the $9.50 area. The floor of that formation, either like the way I'm drawing at the moment, so that's a broadening triangle, or perhaps even a rising trend channel. But at the moment, let's go for the broadening triangle, and above the resistance on the way down around $6.50, we're looking for that $9.50 zone, hopefully by the end of next month. The next riser over the near term is coming up next with the Alignment Healthcare, and here we've had a bit of a handbrake turn, so sharp down day at the end of last week, but then gapping up through resistance, which is very impressive. $7.45, the old resistance area, maybe call it up to $7.50, above $7.50, looking for up to $9.70 at the top of that rising trend channel from back in June. We've covered the next stock quite a few times in the recent past, which is just as well, given that it has delivered on the recovery that we were looking for. Falling trend channel there, bouncing off that around the $4 mark. Current view is that above resistance on the way down around $5.70, we're looking for at least the 50-day moving average at 720, and then hopefully up to the top of that falling trend channel from back at the end of May as high as $12, but that is clearly for the end of next month. The stock coming up next is, I think, a new one, Scripps, and here you can see that we've got this bullish divergence and also a falling wedge breakout. The breakout level around $5.35. Above that, we're looking for the 50-day moving average near $7, which would also tie in with the September resistance area. Only back below that low $5 area, really delaying the upside scenario, but with that strong bullish divergence, the low lows for October, but higher RSI trace, we think that the stock can at least head up to the 50-day moving average. Indy is next, and here you can see Indy Semiconductor. Bullish divergence, we've got a falling wedge and hopefully looking for a breakout there through the 590 zone. Above that, looking for the 50-day moving average around 660 initially. Hopefully that's over the next week or two, and then maybe by the end of next month, the top of the broadening triangle from back in August as high as $7.60. The key here is remaining above the recent support, initial October support around $5.40. That would give us confidence. Going on to Ideanomics, which is liked here not only in terms of the chart, but also the name. It sounds like a name to remember. Here we've got sideways consolidation, bullish divergence going into the October recovery, and the initial target here up to $3.50, hopefully by the end of this month. You can see that the shares are now really toying with the old support there from last spring in the $2.60 area. On to a stock which has had a few mentions in the recent past here, which is good. Well, very nice saucer-shaped recovery here, breaking neckline resistance around the $3.50 level. Above that, the initial target, the 50-day line, $7.28, hopefully sometime this month, and then maybe for next month or the end of the year, up to $16 at the top of that rising trend channel from back in the August period. It's a return of a stock now, which I covered quite a lot, I think, during the pandemic, but Overstock is back with this W-shaped reversal. We've also broken out of the falling wedge in place since June. That level around $15.70, and above that, we're looking for a retest of the 50-day moving average area and the old September resistance, initial September resistance around $21.60. Hopefully we'll see that by the end of next month or even sooner. Next stock, not one which has had much coverage here, but it's Prothena Corporation breaking out of that falling wedge and recent neckline resistance around $49. Above that, we've already hit what would have been the initial target, so the 50-day line, 53.30, but still looking for further upside, maybe up to $59 by the end of next month or even sooner. The next stock is a frequent flyer, or has been in the recent past, Revolution Medicines. Here we're very near to the top of that rising trend channel that's been in place on the daily chart for much of the last year. The target there has been up to $36, which hopefully will be hit over the next week or two. The top of that rising trend channel is up to that $36 level, as I said, but if we get through that, it could be as high as $40 over the next 2 to 3 weeks, which is a resistance line projection from the end of May. At the moment, feeling quite confident about the upside while we're above the 50-day moving average of $30. On to the last two, and here we've got a stock which is perhaps living up to its name, massive unfilled gap to the upside. Nice consolidation there in the middle of the range, or the breakout range, $5 plus. And old resistance there around $4.30. But the view here is that the longer we stay on the right side of $5, the greater the chance of a move to that rather steep resistance line projection from back in March, heading towards $14 by the end of next month. Last stock today comes in the form of TPI Composites, and here we've got another recovery situation in the making. Good bullish divergence, rising trend channel base. Top of the channel there, where the 50-day line is around $4, so looking for that area, maybe $4.20 by the end of next month, and just breaking recent neckline resistance around the $2.90 area. The longer we stay above $2.90, the greater the chance of a move up to that low $4 area. That's it for me today. More updates tomorrow.